Welcome back everyone to RoxomTV. Today is a special edition of the show coming to you during Consensus Hong Kong Week here in Hong Kong. These 3 days we'll be meeting some of the top experts and builders in the Bitcoin space and bringing you a series of interview-focused episodes to cut through the noise and talk about what's actually happening on the ground, whether it's mining, infrastructure, capital, or adoption. So to kick things off, our first guest today is Miah from GoMining. Miah comes from a TradFi background, having worked at Morgan Stanley, and is now focused on institutional side of Bitcoin mining, looking at how mining has evolved into a more infrastructure-grade professional industry. So today, we'll be talking about what changed for miners in 2026 and how AI competition is reshaping the landscape as well. So Miah, welcome to the show.
Thank you for having me. Nice to be here.
Yeah, since this is your first time here on RoxomTV, why don't we start with a quick intro, like your background? Walk us through your journey, like how did you go from more TradFi background, Morgan Stanley, to right now Bitcoin mining?
Yeah, no, absolutely. It's a funny story. So I was born into the world of TradFi finance. So joined Morgan Stanley in London as a graduate. Was there for 15 years, worked my way up to become the global head of margin financing and risk operations. I think margin loans to hedge fund clients, etc. My first foray into crypto, specifically Bitcoin, was during the 2017 bull run when our clients wanted exposure to Bitcoin specifically through Bitcoin futures. And I was part of the team that was analyzing it. And we were very coy. We felt that Bitcoin had no real fundamentals. It was highly volatile, very risky. And ultimately, we did build out CME futures and offered it to our clients, but we offered no leverage. So I was, the ultimate risk adverse naysayer. And then over time, gradually spent more time in the industry, advised a few projects, then joined. And then over the last few years, I've been helping TradFi individuals, companies join the crypto space. And then, most recently joined GoMining to head up the institutional division just over a year and a half ago.
Yeah, so when I was going through the company, so Bitcoin mining company is separated into GoMining, also GoMining institutional, if I got that part correctly.
Yep.
In simple terms, could you tell our audience what exactly is GoMining institutional? What makes it different from GoMining?
Absolutely. So GoMining institutional it's the institutional arm of GoMining. So it is specifically for in professional investors, so think high net worth, family offices, institutions. And what we do is we curate and offer structured Bitcoin mining strategies and products for those professional investors that want to look beyond just Bitcoin and Bitcoin ETFs and find alternative ways of getting exposure and yield from within the Bitcoin ecosystem.
All right, so thanks for clearing that. So I kind of want to dive deeper into the turning point of Bitcoin mining because you have been in the field for a good few years, and I kind of want to focus on the turning point because 2025, last year, it was a very interesting year, especially for Bitcoin mining. We are seeing a lot of Bitcoin miners kind of pivot away from purely Bitcoin mining, maybe to AI, maybe to Bitcoin Treasury companies. So for 2025, for GoMining, what fundamentally changed for the company?
So for us, we are real proponents and we believe in Bitcoin and Bitcoin mining. And we believe that the industry and the product still offers great yield opportunities. So long as you are able to mine at scale and efficiently. So generally speaking, those that pivoted away into things like AI HPC, they may have done it through force. And that may have been because they were previously highly levered. And so as, we saw historical Bitcoin bear cycles, they couldn't keep up with their debt payments. And so rather than going, on the extreme case, rather than going bankrupt, it made more sense for them to pivot into AI HPC mining, which was very profitable at the time. From a Go mining perspective, and on the institutional side, we're very cost efficient. We're very conscious of the risk around mining, ensuring that both the capex and the opex are very well managed. We don't take leverage. We ensure their balance sheet is super tight. And by being able to do that, it allows you to consistently mine and really generate good yield. And ultimately, I guess just an ending point is when larger miners pivot away from the industry, it means that those that still remain increase their wallet share, because now that Bitcoin that would have been mined and went to that large player is now being distributed to the remaining ecosystem players.
Yeah, so one thing I noticed about 2025, so not only Bitcoin Treasury company, it was such a big narrative last year, but also maybe ETFs or governments getting into the whole Bitcoin play. There's a narrative, there's talk that maybe the US government going to add Bitcoin into balance sheet. So with all these narratives, with ETFs, with corporates, with governments buying Bitcoin, do you guys, so Bitcoin miners, actually benefit from any of that narratives, or you just like doing your own stuff?
So yes, we do, but it's somewhat indirectly. So when ultimately it's great for mining and the wider industry when significant amounts of institutional capital flows in, because what it does is it creates immediate liquidity for Bitcoin. And so as a miner, you don't need to worry as much around, having being forced to sell your Bitcoin to maintain your operations, especially if, the liquidity within the market is not that great. What's good about institutional is they're buying in bulk. So just as a reference point, if you take the Bitcoin ETFs alone, the demand for the ETFs was 3 times higher than the amount of new Bitcoin produced by mining. So we know, we can infer from that there's such a huge amount of demand for Bitcoin, yet the amount being produced is so low. So the supply is still, the demand is still outpacing the supply. And as well as those treasuries that are looking to build up Bitcoin reserves, one way is for them to buy it on the open market. Another way is to purchase or generate it specifically through mining. And actually, there are certain large entities and states that prefer it that way, because Bitcoin that is produced for mining is known as virgin Bitcoin. There is no history. It's brand new Bitcoin. Whereas when you buy Bitcoin on the open market, it has a history. So there's a chance it's been, it's touched the wallet that's maybe been compromised or been tainted. And so if you're a large pension fund or a large state and you're adding Bitcoin on your balance sheet, there is that reputational risk you need to manage. And so acquiring virgin Bitcoin can, is certainly preferable. And in certain instances, they're willing to pay a premium for it.
Right, so going back to the whole institutions buying virgin Bitcoin, maybe that's the reason why they want to get into gold mining. Like, what exactly do you mean by infrastructure grade mining? Is it different from gold mining? So if a retail individual is trying to get into mining, trying to get into mining pool, the whole process is like very different to an institution's trying to get into gold mining institutional.
Yeah, so broadly speaking, the difference between the retail product and the institutional product is the underlying mining operations that occur are the same. So it's being done by GoMining, and that is industrial scale, institutional grade. It is there, it's very good. Where the institutional business differs to the retail product is, as a retail user, you're getting exposure through our digital miners through the retail platform. Is very much a customer product. Now, if you're a large allocator or an investor, that wouldn't necessarily pass your investment committee meeting. When you're investing professionally, you need certain institutional safeguards. And so that's where GoMining Institutional wraps its products and ensures it has things like, third party fund administrators, external auditors, independent valuation agents, etc., etc. So it's all about putting an institutional wrapper around the retail product, plus adding certain additional benefits that only Go mining institution can offer in terms of, proprietary trading strategies, etc.
So it seems you have been dealing with big guys, so institutions, money for quite some time. Like you are very experienced when it comes to that. Like for the big guys, so for the big companies, what are they looking for? Are they looking for a steady yield, some tokenized, a hash rate? What exactly are institutions looking for compared to retail?
Absolutely, good question. So generally speaking, we see two types of investors or LPs that are interested. The first is those that have now convinced themselves that Bitcoin is a real investable asset. It's no longer seen as a risky bet, and that is reflective of the huge institutional capital coming into the market. Bitcoin spent most of 2025 above 2 trillion market cap, so it became institutional investable grade asset, and you had the likes of BlackRock, Fidelity advising that yes, you can allocate to Bitcoin. Anything between 2 and 7%. So you have these investors that want Bitcoin exposure, and ultimately they can do that through purchasing Bitcoin. Really, it's the ETFs, or they can look for ways of getting Bitcoin exposure that offers greater yield, and that's where Bitcoin mining comes in. Because historically speaking, Bitcoin mining has a lower cost basis versus simply just purchasing Bitcoin. So where GoMining institutional is attractive is for those that want, long directional Bitcoin yield over time that outperforms spot Bitcoin, then institutional is the way to go. And then the other type of LP that has a lot of interest and that has come into us are those Bitcoin treasuries, or those that already hold Bitcoin on their balance sheet, and they're looking at ways to generate yield. So as you know, you cannot stake Bitcoin. There is no real yield on Bitcoin unless it's some sort of lending product or it's a protocol token that isn't Bitcoin. The only real yield that is true Bitcoin is Bitcoin mining, because when you mine Bitcoin, you get provided Bitcoin as a reward. And so those Bitcoin treasuries, they are very interested because we can offer real Bitcoin yield on their existing Bitcoin treasuries. And so they can accumulate Bitcoin over long term at, more preferential rates than where they could say if they went through a lender where they'll be introduced to counterparty risk, etc.
Okay, just to recap all this information a little bit. So, institutions trying to get into Bitcoin mining, like there are various different reasons. Like for one, they want a steady yield that is more than just simply hodling Bitcoin. And second reason, maybe for some of the institutions want to get virgin Bitcoin because of due to some reputation reason. So my next question is, are there any examples or were there any cases because these big institutions, these big guys purchase so-called not virgin Bitcoin, and then that has somehow somewhat damaged their reputation before, like from your experience?
There's been a few cases, one or two that have purchased Bitcoin and it's been traced to breaches. So think Mt. Gox or Lazarus, those guys, etc. A lot of them, it's more about being preventative. New institutions entering the space. There's a lot of bad PR around Bitcoin. A lot of it is untrue. I think a great example of someone entering Bitcoin, specific Bitcoin mining, is the Trump family. So, American BTC is a Bitcoin mining company that the Trump family invested in because they believe in Bitcoin and they believe in Bitcoin mining. And we're seeing more and more instances where that is the case.
All right, so that leads me to another question because you mentioned Bitcoin treasury companies are trying to get into Bitcoin mining a little bit. Like, do you think because like what we have seen so far, especially February 2026, arguably Bitcoin is in a bear market, so as a lot of crypto, a lot of altcoins. So, do you think like these companies, because like treasury companies, a lot of them are underwater. So getting into Bitcoin mining, do you think somehow it would save their business because like they're down like more than 50% right now?
So when it comes to the treasuries, most of the losses are paper losses, so that it's unrealized. So if you're and really it comes around balance sheet management, which I mentioned earlier. So as an example, if you raise capital and you purchase Bitcoin and added it to your balance sheet, so long as and you bought Bitcoin and it's down, yes, your P&L is down, but you don't have any short-term inherent risk. Now, if you took a loan or if you're highly levered to buy that Bitcoin and buy it on your balance sheet, then you have real risk, because as the value goes down, you may get margin called. And so that's why we're seeing a lot of treasuries in the space are in a lot of trouble. Others are doing better. And ultimately, it comes down to, them managing their balance sheet, managing their risk appropriately. In terms of when it comes to mining Bitcoin, mining Bitcoin is a long-term yield strategy. It's more about generating yield over time. And what's great around Bitcoin mining is, volatility spikes in price that we're seeing right now doesn't really impact Bitcoin mining. It impacts short-term returns, but over the lifespan, and generally you're mining Bitcoin for, over full cycles, so say 4 years, it's not really going to impact you that much. And so that's why treasuries are happy to allocate to mining strategies. And I guess without specifically going into numbers, our flagship product, the Alpha Blocks Fund, it's in the green versus Bitcoin, which is, down 25% over the last 4 months. So yeah, mining definitely is a good outlay. But to summarize, the treasuries that are suffering, they're really suffering because they added Bitcoin on their balance sheet by taking leverage. And if Bitcoin goes below a certain price, they're going to get called on that and they're going to have to liquidate.
So tell us a little bit more about your personal take on these Bitcoin treasury companies. Are you bullish or bearish? Do you like them or not so much?
I like Bitcoin treasuries so long as they're managed well. So, like any industry, you will always have some bad players and some good players. My view is, if you're a company and you want to diversify and you want to add Bitcoin to your balance sheet, or you want to grow a Bitcoin treasury, so long as you're doing that in a cost and capital and risk averse way, then you're fine. But as we've seen, there's a few companies, there were existing public companies that were failing anyway. And so they pivoted almost as a last hurrah into becoming a Bitcoin treasury, raised some capital, issued some debt, added Bitcoin to their balance sheet. They're not going to do so well. They're probably suffering right now. So I think, as long as you approach it in the right way, like any business, adding Bitcoin to your balance sheet, it makes sense, especially in the long term. So it's really case by case, in my opinion.
Yes, I mean, I strongly agree with that. Like, it comes down to management, and it really comes down to how the company, basically case by case. And based on what you said, like right now, a lot of these treasury companies are just like paper laws.
Hmm.
If they could hold it for a little bit longer, maybe for a year, maybe things going to be fine. In other words, like, do you personally believe in a 4 year cycle, like 4 year mining cycle? Do you think it's still intact or no longer intact? We are just like trading as of some macro narratives right
Yeah.
now.
So I think the previous 4 year, there is still a 4 year cycle, but it's not what it used to be. So the historic 4 year cycle was very much driven around, the Bitcoin halving occurs, then the price rallies, and that controls your cycle. However, over this last cycle, what we've seen is, we're in an extended cycle, and that's, really due to the significant amount of institutional capital that's coming into the ecosystem. So, direct investments, ETFs, etc. That's created a lot more institutional demand, much better liquidity, and that's why we're not seeing as many, sharp corrections or running into like bears or blow off tops. So I think it is still cyclical, but the fundamentals are no longer purely driven by mining economics. It is now driven by that, as well as, institutional activity occurring in the space. But equally, if you're a miner, you do have to be conscious of that as more institutional capital comes in, more miners have entered the space. And whilst as the network hash rate grows, the hash price goes down. So if you're not mining at a very low cost basis. You have super low energy rates, very efficient machines, etc., etc. Then as soon as the price comes down, the hash price comes down, you're going to go out of business. So again, it comes down to how efficient of a miner are you, how well are you running your business, what's happening with the institutional flows. It all matters. So yeah, I think we're in an extended cycle, but that cycle will start to decouple more and more as time goes by.
Does it would you say it makes sense? The 4 year cycle is not so much tied to the mining Bitcoin hash rate anymore, maybe to something else. I don't know. Do you think it related to midterm election because it happened every 4 years? Well,
Yeah, so absolutely, there is a view in the industry that Bitcoin's, initial race past 100K was driven around when, Trump's getting into office. And he was super pro Bitcoin. Um, his intentions was clear that he wants, regulations to be relaxed. He wants to be pro Bitcoin, pro crypto in general. That certainly helped. And I think that, resulted in the price probably growing faster than would have happened in a general cycle. And then that sustained throughout the period. But then we've had other macro drivers that's really driven. So, tariffs have been a big problem, not just with Bitcoin, not just with crypto, but in all markets, it's really impacted. That's one of the reasons why gold and silver has rallied so much, is because they're seen as a risk-off asset. But if you just take a step back and you think about it at a macro level, everyone has become more Bitcoin friendly, from institutions, regulators, capital allocators, states, governments. So, in my view, Bitcoin is here to stay. It's got positive, a positive trajectory. Yes, we will see the volatility like you do with any asset class, but that will smooth over time.
yes. So this is why I find it really surprised, like when a Bitcoin miner these days are not pivoting to, I don't know, like a treasury company or maybe AI, because AI happens to be a buzzword. So why don't we get into the strategy that GoMining or GoMining Institutional is doing right now? Like, what is the secret sauce? Basically, all the miners pivot to AI. We have Core Scientific or Irene, like all these guys are pivoting to AI. Like, what is the secret sauce for you? Because you mentioned we need to have really cheap energy, maybe perhaps renewable energy. What is the secret? Why gold mining still managed to focus only on Bitcoin mining?
Yeah. So the approach Go Mining takes is that we've always been compact and agile. And our business model is fundamentally different to a traditional Bitcoin miner, in that, the way what they do is they are purchasing mining equipment, they're running it, generating Bitcoin to then reinvest. Our model is slightly different in that what we do is we tokenize mining power, and then we're selling that through our platform to our end users. And similarly, on the institutional side, the institutional products become clients of GoMining, and then they run their own strategies. Now, what allows us to do that is, one is the ability where there's most of our operations are in North America. Think West Texas, where energy is very, very cheap. You have things like curtailment. We buy direct from the manufacturer. So again, you get incremental wins there. So if you focus on the fundamentals and then you don't take leverage, then you are much better able to, absorb when you have volatility like you have right now.
Yeah, I kind of want to dive deeper onto the tokenized hash rate, because that is so for retails out there, for viewers out there, that term might be unfamiliar. Like, why do institutions care about tokenized hash rate? Like, are
do is, the way to think about it is, we own and operate Bitcoin data centers all around the world. And the mining power that is produced by those data centers is measured in hash rate. And it is that hash rate that generates the Bitcoin rewards ultimately. So what we do is we tokenize that hash rate and sell it through our platform in the form of digital miners. So what that allows is a retail user or an institutional user to get access to Bitcoin mining economics without needing to worry about mining itself. So they don't need to worry about physical machines, they don't need to worry about uptime, electricity contracts, anything like that. They simply purchase a digital miner, then we take care of everything. So we'll mine the Bitcoin on their behalf, we'll deduct the OPEX costs around it, and then we send them Bitcoin on a daily basis directly to their wallet. So they get the benefits of, the economies of scale of a large Bitcoin miner, without the need to worry about mining itself. So it's very desirable from that perspective.
So in other words, like anyone, any retail could just like walk in or utilize the platform that you provide and purchase like a tokenized hash rate and get exposure to Bitcoin mining without the barrier, if I get that right.
Absolutely, yeah, absolutely. So on the retail side, it could be as low as $20. It could be as high as $100,000. So you can see the price point is very low. You spend $20, you get a certain amount of hash rate, and that's it. And then we take care of everything. Now, as you're receiving your Bitcoin, you could decide to reinvest, so buy more hash rate, upgrade the efficiency to mine more. But ultimately, it's a one-off purchase, and then that's it. And then we take care of everything. The alternatives are, you could attempt to self-mine at home, but it's pretty much impossible now. Energy costs are too high. You don't have those economies of scale. You could go to a hosting provider, but then you're locked up into contracts. You have to worry about things like downtime, issues that you don't have with GoMining. With GoMining, it's you're just buying mining power, and then we take care of the rest, and you get the yield at the end.
Got it. And another buzzword, as I mentioned earlier in the show, AI. Like everyone's talking about AI. I wonder if GoMining is adding some component of AI when we are mining the Bitcoin.
Not specifically. So we do have, we do use AI in some of our workflows, or some of our monitoring around, like our firmware, etc. But we ourselves do not participate in AI, or otherwise known as HPC mining. That's a strategic decision we made. Generally speaking, those that have and that have been successful, or because they had the expertise in house to do it, or they had the infrastructure to pivot. It's not as easy as most people think. Like, imagine if you're an existing Bitcoin miner, you cannot suddenly start mining AI HPC the next day. It's a completely different type of physical equipment you need. You need a different type of tier of data center, different expertise. It just so happens, say the CoreWeave guys, they had the expertise in house, so they were able to do that pivot. From our perspective, we use AI in our flows, but we're not mining AI per se. Not yet anyway.
Got it. Well, since this is during Hong Kong Consensus Weekend, since we're in Asia, why don't we right now hop to the Asia segment? So Asia is a massive region, and when it comes to crypto adoption, like Asia is rising rapidly. So I wonder, like, is Asia part of the mining plan in gold mining, or is there any strategic play in Asia at the moment?
Yeah, so our users are all around the world, and a large portion of them are in Asia, and we are actively focusing our efforts in expanding our presence in certain markets. More broadly speaking, around the Asia landscape, at the fundamental level, whilst mining Bitcoin is, say, illegal in China, the the physical equipment is actually manufactured and distributed from China. So Bitmain, the largest ASICs producer, is in China. A lot of the equipment comes from China. So there is a big part of the ecosystem exists there, and there are some miners in China operating, under the radar. In terms of places like Hong Kong, what we're seeing is, they're further along in their institutional adoptions. because the landscape exists and the infrastructure exists from an institutional perspective for banks, institutions to participate, and they will allocate, and the majority of the allocation is happening in Bitcoin and Bitcoin narratives. And then if I think more broadly, say Singapore, that's where you're seeing a lot of the investor base coming. So if you think your high net worth, your family offices, they tend to be a lot faster at allocating and making decisions. And then Japan is, it's moving along. We're hearing things about stable coins and chains, etc. So no, Asia's is a very exciting time to be in Asia. You don't see as much mining per se in Asia. Energy's not very cheap. There are some pockets, but generally speaking, I think it's end financial products or the manufacturing itself that is occurring in Asia with regards to Bitcoin mining.
Now I'm very curious because you mentioned like the energy cost in Asia is not very cheap. Like, what is the cheapest region? Is it in North America? Like from your
It depends, and this is another element of what makes some miners better than others. So, renewables can be very, very cheap because it's in abundance. So if you can manage renewables, then it's a great place. As an example, we mine in Ethiopia because there's hydropower there, and it's very, very cheap, and it's a great place to do it. A lot of our focus is in North America, specifically in Texas. Um, they have some of the best infrastructure when it comes to energy, some of the cheapest. They offer programs such as curtailment, which is very desirable. And they actually work with miners to help manage their power grids, which is great. Now, don't get me wrong, there are places in Asia you can do it, but it's just making sure that the energy pricing is economical, but also the government regulation is there. Not all countries allow mining. Not all understand it or have a bad view of it. So often you're working with governments. And then I'll just give you a last example. If you take the MENA region, think of your Middle Eastern states. They have abundance of oil and gas, and so on the face of it, their energy is some of the lowest. But because these countries are very hot and you have a lot of sand, then whilst your energy cost might be low, your cooling costs will increase. So you have to manage, that fine balance.
Yeah, I definitely find that interesting. And when it comes to Bitcoin mining, each country has different
Mm.
jurisdiction because, like, China is an interesting region as well. Like, crypto trading, technically speaking, is legal, but like crypto mining, Bitcoin mining is completely illegal. Whereas Hong Kong, we kind of have that freedom to do whatever we want. We could do mining, we could be in trading, but like as you mentioned, like the energy cost in Hong Kong might be a lot higher
Mm.
compared to other places. So moving on to towards the last segment of the interview, tell me about the next plan. Like, what is the roadmap for Go mining? Where's the best opportunity next?
Yeah. So at GoMining, we've already started to evolve to become a full all-in-one Bitcoin finance portal or application. So whilst the core business has been tokenizing mining power and selling it through our platform, we now offer other products. So, as an example, we have a debit card. So, it's a Visa debit card. So, as users are, generating Bitcoin, they can spend that Bitcoin through their virtual card. And the rewards we offer are you receive additional mining power as a reward. So instead of receiving cash back or Bitcoin back, you get mining power that generates Bitcoin yield, in perpetuity. We've also launched a simple earn product. So if you have residual balances in your wallet, we can generate yield on that. We're about to launch a lending product, so you can borrow against your Bitcoin or you can borrow against your digital miner. We just announced, actually, and we're showcasing it here in Consensus, a partnership with Jacob & Co, the luxury watchmaker. So we've launched the first world's Bitcoin mining watch. So it's a luxury timepiece that comes accompanied with a digital miner. that will mine Bitcoin for you in perpetuity. So there's only 100 pieces. It is very nice. Available on the marketplace or in Jacob and Co.'s flagship stores in New York and Miami, I believe.
Yeah, I'll definitely very intrigued to check out that watch for sure. So for our viewers out there, if they want to know more about the GoMining updates, maybe just they want to check out the watch, or maybe they want to check out the tokenized hash rate, where is the best way to reach out to you guys?
Yeah, so the best way I would say is through the normal social. So the website is gomining.com. If you want to come to institutions, it's institutional.gomining.com. And then we're also on X, we're on LinkedIn, TikTok, everywhere else. We've got a large presence. We have a fantastic community, very invested in what we do, support us very well. We've grown the platform over 5 million users. So, and it keeps growing.
All right, guys. So you heard the guys. That's all the time we've got for this segment. So thank you so much, Miah, for joining us and sharing those insights. If you guys want to learn more about GoMining Institutional and their latest research, do check out them on socials and on X. We're going to take a short break, and when we come back, we'll be joined by Will Wu, who's the head of growth at Bitget Wallet. He'll give us an insider perspective on crypto payments and remittance and how wallets are shaping real-world usage beyond just trading. So stay with us. We'll be right back after the break.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick, monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Fuck. Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Welcome back, everyone, back to RoxomTV. Thanks for sticking around with us after the break. So joining us now is our second guest of the show, Will Wu, the head of growth at Bitget Wallet. Bitget Wallet is one of the largest non-custodian Web3 wallets used by millions across Asia and globally. And it sits right at the center of how people actually use crypto, from payments and remittance to swaps, DeFi, and everyday on-chain activity. So Will works closely on user growth, partnerships, and real-world adoption, especially around stablecoins, payments, and wallet infrastructure. So today, we'll actually get an insider perspective on how wallets are evolving beyond trading, what's really driving crypto adoption in Asia, and where payments and remittance are heading next in the cycle. So Will, welcome to the show.
Yeah, glad to be here.
Yeah, great to have you on. Like, since this is your first time here on RoxomTV, why don't we start with a little background of yourself, how you are, and how did you get into Bitget?
Yeah, hello everyone. This is Will. I've been joining Bitget Wallet for actually this month. It just counted 12 months, so 4 years this month. Before I joined Bitget Wallet, I was working for CX and also DEX for around like 4 or 5 years. And before then, I was working in Web2 for consultancies. One of the key reasons I joined Bitget Wallet is to actually want to make sure the fintech to apply for more users, especially when I see the underbanked users and unbanked users are actually quite a lot in around the world in different regions. But there's not actually some great solutions at the moment. And I think the DeFi will be definitely the futures. So this is one of the reasons why I joined Bitget Wallet, and also really believe in the visions we are building now as well.
Yeah, let's do a quick background
Sure.
of Bitget Wallet because the background is quite interesting. It actually started as an app called Bitkeep years ago. So it started out as an independent wallet. Then Bitget came in 2023, invested $30 million to acquire a controlling stake in Bitkeep. So walk me through how's the shift from Bitkeep before to Bitget Wallet right now?
Yeah. I think it's been changing a lot for the whole Bitget Wallet branding. Previously, we would be acquired by Bitget, so this is the why we're changing the naming to Bitget Wallet. And previously, we're focusing more on like only meme tradings, maybe like 2, 3 years ago. And then we're starting to understand more about like each region has different pain points for us to fulfill. So we're starting to build up like integrating with more ecosystem, like we integrating with over 100 of the ecosystem now. You can basically trade any of the assets you wanna own, you wanna trade, you wanna earn on Bitget wallets. And starting from last year, we built up more aggressively on the payments verticals. We understand about if we try to let users having the daily habits to use the wallet or to fulfill their fintech needs or their financial needs, PayFi is something that we need to really understand and explore. So starting from last year, we're doing like a Southeast Asia's like QR scan, and then we launched the cards in Europe, and then in Latin, then in APAC for the crypto cards, and also like bank transfer, the solutions we use for remittance in Nigeria and also Mexico. We've been building up lots of different type of PayFi features, and we're still exploring more, like the pay-in, payouts, remittance. Still got lots of regions still yet being like served. So this is still in the progress, but we've been moving from a more like advanced trading tools, become a more like everyday finance tools for no matter where you are. If you got a mobile, then you can do whatever things you want to do with the DeFi assets you want.
Yeah, so it sounds like Bitget Wallet went through some huge change from being very advanced only for really tech-savvy people to everyday people, like the UI becomes a lot more friendly. So I wonder, like, since the focus is shifting to PayFi, to payments, to make it adaptable to everyday users, like, how are the developers using your API so far? Like, how easily accessible it is. Maybe like if I go to a DeFi platform, can I connect to Bitget? Like how accessible it is?
This is actually a new things we just announced to open the API for more users, also for our enterprise partners, ecosystem partners, and also for more like operators that need better liquidities. It's not yet open to all users. What we try to doing here is that we want to providing more better executions efficiency for more operators to really boost the whole ecosystem efficiency. So Bitget Wallet has already built up our own aggregator for the liquidity. So if you have been connected with our API and using our aggregator, you will be able to trading most of the assets we already supported, and also the chain will be supported, because we know that for all the developers or all the operators, it's been pretty challenging and pretty like a huge investment for everyone to doing everything from scratch. And even just started it, you need to spend lots of time to improve it. And now we are already been like doing quite in the scale, and we want to ensure more users can be able to have the type of the benefit for this aggregator. So we want to open the API for more enterprise partners. And if you are got a trading communities, or if you got API demands, you can also reach out to us. Then our aggregator for a better liquidity for most of the major chains, and also the better execution efficiencies, then there'll be something that we can provide to all users.
So speaking of the growth of Bitget Wallet, like of course a region that we cannot ignore is Asia. So let's shift gear a little bit and focus on the whole Asia adoption. So specifically in Southeast Asia, what drives mass adoption first? Is it like payment, remittance, or basically they're trying to earn a stable yield from their wallet?
Mm. So they got Southeast Asia is still like a huge regions. For example, the users in Indonesia and the user in Vietnam and in Thailand, their demands and also their user behavior will be still quite different. One of the biggest advantage of the wallet now is that we're providing trading, we're providing earn, we're providing payments at the same time. So in different regions, we can fulfill their different needs. So like for example, in Vietnam, we currently have the QR scan, and this QR scan benefit from the current governments. They already got all the QR scan cover around like 95% of their local merchants. So once we integrated these solutions, basically for everyone who currently travel to Vietnam, you can just use your Bitget wallet, scan all the QR code you see on the street. It can be the fruit merchants. It can also be a pretty premium spa. Everything you try to pay, you can do it in Vietnam with Bitget wallets. And like for Indonesia, we got a pretty strong partnership teams that keep bringing different kind of partners. Like in Indonesia, like users like lots of different type of yields and also like airdrop opportunities. So this is something that we can keep providing different opportunities for people feels like they'll be able to participate in lots of different incentives. And like also for Thailand, they got a mixtures of the demands, both trading, earn, and also payments. So what I want to highlight here is more about not just for Southeast Asia, even like the whole Asia, and also the global wise. We still need to look into deeply of the localized demands differently and provide them something they really need instead of something we try to promote. Yeah.
That is definitely some very intriguing information that I just heard. Like going back to what you mentioned about Vietnam, like does it mean like basically how widely adopted for crypto in Vietnam? Like is there a certain percentage of population that people are already using crypto in Vietnam? And you mentioned the QR code. Is it like every single corner in Vietnam is so widely adopted? What's the situation in there?
Yeah, basically, for all the local users, so they got two different type of users, right? One is the local users. Basically, all of the local users, they do the QR scan daily. And one of the reason is that some of them don't have the debit cards, and the most convenient payment solutions for them now is the QR scan. So for the Web2 users or all the local peoples, QR scan is basically covering, I think, maybe over 80% to 90% of their daily usage. The other type of the users is the travelers, and also currently in Vietnam, they got lots of digital nomads. And for those users, they don't not necessarily have lots of local currencies, or usually they need to transfer from their local bank. For example, if you are digital nomads come from Europe, you might need to transfer by SWIFT for your local bank and then go to Vietnam's bank. So open a bank account in Vietnam already take a lot of times, and the SWIFT also take a lot of times, and you don't know when or if there is any challenges you might face. So this is also one of the key target audiences we try to explore for those travelers, digital nomads. Those are not basically long-term based in Vietnam, but they need to have a daily consumptions in Vietnam.
Yeah, so far we've talked about remittance, especially in Southeast Asia. We've talked about Thailand. We talk about Vietnam. They have a strong reason why they need to use crypto because they need to send around. It's basically just transaction. But what about like higher income places in Asia? Because Asia is a massive region. Like what about compared to Taiwan or maybe compared to Hong Kong, where these places are generally have higher income? Like, what is the narrative or the reason for them to adopt crypto and use that on a daily basis?
Mm. So this comes to some discussions. The two markets we just mentioned is actually also being quite regulated at the moment. So for this type of regulated economy, and we try to improve our situations, not just for stablecoin, but also like for our old Bitget Wallet situations. One of the key stuff we need to do is that to understand about their trading behavior and also how they deal with their Web3 assets. So like, take example for Taiwan, all this habit is pretty like all the shift is actually quite aligned with the market trends. So for example, recent situations of the macro market is not really well. So the earned products become much more important for the team, for the whole market. So then the earned products in subscriptions in Taiwan, in Japan the growth will be really good. But when market comes back, like in January for Japan, they suddenly got a meme trends they want to capture. This type of trend basically comes to Japan for like once a year or twice a year. It's really not something that popular for the whole years, but once it comes, the trading volumes might surpass the whole Asia. So from what we're trying to do is that we're providing 1 to 2 major products for the markets, but based on what the market's current situation is, and we will keep changing them and to promote to the users and understand about what is the current community needs and what type of the things they care the most. Sometimes they want a higher yield. Sometimes they are okay with the conservative yield, but they want more stable product. So especially on those mature markets, not just on the payments, but they're also caring about other features that can help them to get a stable wealth effect. Yeah.
Yes, well said. So basically, it's just like different region has different reason to adopt crypto. As for a wallet provider, like a wallet provider company, you just need to come up with interesting way to bring users up.
Yes.
So how are you localizing features like fiat on ramps or off ramps to basically speed up these adoption across Asia? So not just like
Yeah.
mature markets, maybe in Vietnam or in Thailand or Southeast Asia as well.
Yeah. So basically, Bitget Wallet it's a platform, it's a interface. So we don't build up everything by ourselves. If we try to working with, or if we try to providing services for all the regions, we need to find out different partners and vendors in different local markets. And as everyone knows, that PayFi is highly regulated at the moment. So we would need to ensure that we're working with the partners that is compliant as well. So for example, if we try to launch the cards globally, we're currently working with 3 to 4 different partners around the world to ensure that we can providing a service to enable more countries being covered. And at the same time, not just to enable the product, we also need to find a better rates, like FX rates, fee rates. And so we need to source more vendors and partners. Some vendors, they pretty specialize in specific regions like Southeast Asia. Some are pretty specialized in Europe. Then we need to work with different vendors all at the same times. And this type of cooperation model will need the teams to have 2 strong capabilities. One is in the PayFi BD capabilities. The other one would be on our product development capabilities. So these 2 are also quite important resources of the wallet at the same time. So once these 2 are working pretty efficient, then this is how we can providing more services to more regions. Actually, PayFi including not just payments, but also like OTC and also paying payout. We mentioned about the bank transfer, and there are also lots of different type of like shopping is also one of the things that in PayFi as well. So all this will need different type of partners to work with us and integrate it with Bitget Wallet.
Yeah, exactly. So when it comes to growth hack for a wallet provider, we have to consider every single angle. So it's not just real use cases
Yeah.
for users, but also maybe when it comes to ecosystem access, because we touched this briefly, we talk about API. So I kind of want to get back into that because I know you guys, there's a new announcement. There's like an access to ecosystem like Hyper EVM, so Hyperliquid. So like how does that, like what do you see in Hyperliquid and why there's this latest announcement from Bitget Wallet?
Mm. Hyper ecosystem is pretty different from some of the ecosystem we see. Hyper itself, they got lots of traders inside the ecosystem, and also lots of features are building around the feature trading related stuff. This make a huge difference for Hyper, that the whole Hyper ecosystem got a pretty strong community at the moment. And the strong communities also been pretty localized. Like in Asia, they got a Hyper communities in Japan, in Southeast Asia, and also in South Asia, and they're expanding. One of the key points we integrated with the major ecosystem or this type of like leading ecosystem is that their communities is pretty loyal to their ecosystem, and they try to expand their ecosystem as well. So if you want to use Hyper in a one DeFi wallet or one DeFi app, you will try to understand like which app now is currently supported. And actually, Hyper EVM is not a like simple ecosystem for most of the platform to integrate it with. But we highly prioritize it because we know the community here, resources here, and also the developers communities on all these platforms and the ecosystem is quite different and quite loyal. So for all the ecosystem have this type of characteristics, we will spend more times to invest in it and engage with their communities. And this is how we doing the growth from the ecosystem integrations.
Yeah, I personally, I witnessed that Hyperliquid is still happen to be one of the strongest ecosystem or one of the strongest blockchains, despite in a market downturn, despite in a bear market. So that is something very such a phenomenal. So I wonder, like, if you have any metrics or stacks you could share, maybe after adding Hyperliquid, Hyper EVM access to everyone, all the users in Bitget Wallet. Like, do you see an uptake because of from coming from Hyperliquid?
Yeah, there's no specific metrics because we run several different things at the same time, but the Hyperliquid to bring us quite lots of new devices compared to other ecosystems, which means that all those users previously are actually not trying our product before, but they knows our product because of we integrated this ecosystem. I think this is something that quite impressive. And we also see some numbers quite differently, like especially in like Japan, in South Asia, this type of new devices come from Hyper, also quite interesting from other regions. Yeah, so with this new ecosystems integrations from the metric side, we see it got its characteristics in geography-wise, and also how our exposures can really extend it by integrations.
Yeah, because not only adding Hyper EVM, I noticed, but when it comes to on-ramp or off-ramp, so on-ramp, you guys offer Apple Pay and Google Pay.
Yes.
Like, do you see that is like helping with the whole user adoption? Do you see because you add some on-ramp options to our users, you see some unlock a massive amount of first-time users to Bitget Wallet?
So different type of the on-ramp solutions have the like echo to what we just discussed. Actually, different type of on-off-ramp solutions need to fulfill the different needs and demands of different type of users. One of the key, the core users for the Apple Pay or this type of mobile payments, the key characteristics is that it's really fast. So everything's let's say if you try to buy a Dogecoin or the recent really popular meme coin, you want everything happens from on-ramp to you get the coins maybe within minutes or sometimes within seconds, because sometimes the market pump up really fast. You need to really capture it. And these situations usually happen in two different type of users. One is that it's actually a new users come from Web 2 or come from CeFi. They are trying to figure out some new platforms to buy the DeFi tokens, but they don't really know how to get the on-ramp easily. So this type of Apple Pay, which is familiar for them on the daily life, is getting more important. And the other type of the on-ramp solutions is more care about the FX rates, also the fees here. Those people, they are pretty like OG in the industry. They care about the executions efficiency. They care about the cost. So we provide both at the same times. The later options, they might take longer times, but it's still pretty fast, but take a little bit longer times. And it sometimes might require some information verifications, but their cost and also what they can provide is much better than those mobile payments. But to those new users to DeFi, those might be a little bit complicated. But what we want to do is that we provide both to different kinds of users. So then they can choose whatever they want, either the one they're more familiar with or the ones more cost efficiently.
Got it. So there are basically millions of users of Bitget Wallet, and everyone has different reason to use it. Like as you mentioned, some people might care about how fast they could trade some meme coins, while others they might care about the remittance, sending money around using Bitget Wallet. So I wonder, based on the metrics that you have, like since there are millions of users of Bitget Wallet, like which regions are the strongest? Like, could you tell me the top three and maybe why?
Yeah, the current some numbers I can share first around the world is that for the card usage and the card expenditures numbers last year we got a annual report just launched in January. We got a 28 x 28x 28 times of the increase in 2025 just for the card expense. And the other numbers is on the earn products. We got around like 10x for the whole earn subscriptions volumes. So this too is quite important for us to follow for the overall global growth is on the right track. And if we're talking about the geography wise, APAC is still quite the one that grows a lot, especially in Chinese speaking ones. And also we see like Japan is also pretty steadily growing. Um, though their user base is not huge, but their like amounts of the users, their average spend amounts of the users is pretty tremendous. And also we see like in Taiwan, it's also a market that we see from the PayFi side. It's something that we need to uh, invest more because like the users here, their qualities based on how they spend and also the investment we spend on those users, the return is also quite good as well. So the whole Chinese speaking market, Japan, and we're also trying to exploring more on the Southeast Asian markets to see one or two markets from Southeast Asia we can invest more as well.
So I wonder, like right now, arguably we are in a bear market.
Yeah.
Do you see the users are pulling back? Are they not utilizing the wallet as much as maybe 2 years ago, or just like pretty much the same?
I think from what we observe is that because if we just promote the wallet as a trading tools, then the uh, like the frequency of you using the wallet is actually will be pretty rely on how the market looks like and whether it's really bull or it's bad markets. Basically, in a bear market, no one would trade. But think about it, in bear market, you still want to do travel. So if you travel to Japan, if you travel to Vietnam, in Philippines, all those areas, you still need to like all the pain point we just mentioned about remittance, about the global travel, cross border those will still happen. And also at the same time, if in the bear markets, the demands for the earned product would also increase as well. So I think the shift from our daily usage is actually benefiting from our narrative changing from everyday finance changing from the trading to everyday finance. We're making users to really engage with our products, no matter where there's a good market trends or whether we do any campaigns on trading, but they use the product because they need it, because the product can really solve their financial needs and demands. And especially once we got more features on the platforms, we also find out that we can serve more like underbanked and unbanked users. Some of the users, they cannot having a card because they might be not able to get the certifications from the bank because of their they might like digital nomads we just mentioned, or some people they just doing the work, they are hard to get like salary proof, something like traditional bank they needs. But in the crypto world, we don't really need those stuff. Just ensure that you are real people. We do a simple KYCs from our vendors, then you can able to use all those services and solutions. Yeah, this is how we can provide more solutions to underbanked and unbanked users, not just in Asia, but across the world.
Yeah, this is also a trend that I've spotted over these years in crypto. So I noticed all these crypto exchanges are offering Web3 wallet, non-custodian wallet. Like we have OKX doing the OKX wallet, and we have Binance doing the same. So I wonder, like in one simple sentence, like how could you differentiate like Bitget Wallet from all these competitors like OKX, like Binance?
Mm. Um, Still back to our narrative is that Bitget Wallet is a all-in-one wallet. So it's not just all like OKX and Binance or other. They still got lots of different wallets, also like Phantom, MetaMask. Lots of wallets that got one or two features they're promoting the most. But in Bitget Wallets, the biggest advantage is that we give you whatever you want, and you can choose it pretty easily. So now our UI, our products, everything is designing toward these directions. So the everyday finance is including with highly localizations and also user-friendly UI UX design. So if you try to think from a Web2 user's perspective, open the Bitget Wallet app, you'll easily find the pay features within seconds. And if you want to do earn, also within seconds, trading also within seconds. This is also one of the challenges we interview from the user is that most of the DeFi or wallet app for them is that it's quite difficult to use. And not just on the trading or PayFi side, we also just launched the social login features. The social login feature means that you don't need to remember those to some people will still like put those like memorable sorry, I just forgot. Yeah, script. Now you can just directly create a wallet by your Gmail, by your personal email, and everything will just happens within 10 seconds. And you don't really need to worry about how you store those passwords, how you can ensure that nobody knows, because it's more like using the social logins is pretty similar to what you're doing for Web2 mobile banks. So we want to make sure the user experience is much more friendly and familiar for all the users. Yeah. So everyday finance and all-in-one wallets. This is what we keep pushing for 2026.
But for Bitget Wallet, it's
Yeah.
still a non-custodian Web3 wallet, like
Yes.
meaning I don't need to do KYC. Just grab the seed phrase, I could transfer my money out of the wallet. Am I correct?
Yeah, correct. So all the like one just mentioned, if you try to create the wallets to all the services you use, it's still a self-custodial wallet. And even like the card we just mentioned, you can also decide, because the card is a debit card type of systems. So you can decide it like how much asset you want to put into the card. That is also by your own decisions, and you still own the decision-making process for your asset as well. So from seed phrasing, social login, it's not changing the base of we as a self-custodial wallet.
I think one thing that users find it really scary when they're trying to touch non-custodian wallet is the security aspect. Like if they are actually controlling their own key. I wonder for Bitget Wallet, is there any measures to tackle security threats like phishing towards the Bitget Wallet users, or it's just like because it's completely non-custodian, you guys would just leave it to the users?
Yeah, this is also the topics we discussed quite a lot this week in Hong Kong. There got more like AI agents happening these days, and how Bitget Wallet currently using the AI services now is that we try to leverage more AI solutions to help the users to making decisions and making decision including go or no go. So like in trading they got so many different types of tokens. Some are pretty scammy. So in this case, we'll give them the alerts based on our analysis. And if the user try to connect it with a suspicious like phishing link or also some of the scamming link that's already been identified pretty risky, we will separate on different criteria and then the user knows this link might contain certain like risky stuff and we will suggest you not to do it. And if you want to do it, then you still need to own the risk by yourself. Yeah. What we try to do is that we provide all the analysis we can for the users and to let the users know what potential risk he is going to face when making these decisions. But we don't just, we also like block some of the like websites or some of the app if it's already confirmed by like some like third party. But if it's only like new ones, what we can do is that to support more on the user's data identification side.
Okay, got it. Like at the end of the day, it's a non-custodian wallet, so users really need to know the risk before getting into holding their own key. So I highly recommend checking out more educational stuff before getting into crypto, before handling your own key. So as crypto becomes more invisible infrastructure, I'll say. So what is the industry least prepared for 2026 in your opinion? Like what is the missing puzzle right now? You feel like, okay, maybe we need to tackle within this year.
I think they got two things. The most core stuff I think would be what you just mentioned about the education. I think the education part is still, especially when we exploring into more markets, we know that the education is actually quite difficult. Especially let's for example in Japan, the meme trends just pump up within a month. Everyone try to capture the trends, but how to ensure like they know the risk, they understand how to create a wallet or how to identify the meme coins is scamming or not. Those educations will really take us time, and different market also has their different stuff need to educate with the users because they are on the different phases. So the education is quite important. Yeah.
Yeah, so as for the educational side, I
Sure.
wonder if Bitget Wallet is doing anything to educate the users, maybe warn them, okay, this is your own risk because it's non-custodian, you actually bear the seed phrase. What is
Yeah.
Bitget actually doing to
Yeah.
educate the users?
So currently we got two perspectives. The one perspective is in-app online. The other one is offline. So in-app side that we got lots of different the alert I just mentioned. We also got the help centers currently. So if you see like most of the apps help centers, they just give you lots of context, lots of textings there. But within bigger wallets, we give you actually step by step. So you will know that if you follow all the steps, everything happen within the app. You don't need to click any other browser. So all the help center stuff, all the guidance can be done within an app, and you can see all the screening, like just simulations, how you're going to do one step by step. So even the newbie for the Web3, they can also follow it. And when those part that need alerts like the app engagements, high risky ones, will also send alerts. And we also got another section called Crypto 101. This is 100% designed for newbies. Actually, we're actually looking into this like something created for our parents or for our friends that never get into Web3, but they are keep asking about the questions. So this is also something that we do with it. It's like a task, give you some rewards. But after fulfill those assignments, then you will understand about how the Web3 risk is. And the other side we do a lot is that all those core regions we have, we've got the local regional managers. We keep doing different offline meetup, sometimes with the KOLs, and also sometimes with the traders communities, to really let them know and understand about how the wallet is operating, what is our plans looks like, and if they try to like create a new wallets, how is the process looks like. All this like face-to-face engagements also help us to understand more about what the users really concerns about. Sometimes they're concerns about whether their informations in the wallet might be spreading out somehow, but some of the questions are actually not pretty like real. But you don't know that those if you don't do the face-to-face educations. So in-app education and also face-to-face meetup, these two are something that we continuously doing.
Awesome. I particularly like the in-app education, especially towards parents, because I'm sure going to save me a lot of time from educating my mom into Web3.
Yeah.
So, all right, we are moving towards the end of the interview. If our viewers want to know more about Bitget Wallet updates, or maybe if they want to test it out themselves, what is the best way to reach out to you guys?
Can just follow us on Twitter. Our Twitter for if you speak Chinese, we got a Chinese. Actually, from all the regions you are from, we got basically the different languages Twitters, X accounts you can follow, and also different regions will have different type of activities. So follow our accounts, those with the languages you are more familiar with, and also you can check our global TG channels as well. There will be some announcements, and we also do the customer service on it 24/7 as well.
All right, big thank you to Will Wu for joining us and sharing those insights. If you want to learn more, and you can visit the Bitget Wallet X and also website, or maybe just download the app and try it out for yourself. We've got more shows lined up here on RoxomTV, and I'll be back tomorrow at 3 a.m. Eastern Time, so make sure to set your reminder. Thank you so much, guys, for watching. I'll see you guys tomorrow.